So welcome again. So Assured and the alliances. Assured is a cybersecurity specialist broker when it comes to insurance. They were introduced to us by one of the community who had their eyes opened by the work that they did on renewing their cyber insurance policy. And we've sparked a broker slash referral agreement with them and partnership with them. So anyone from the alliances can be introduced to them. And if you do renew with Assured, then we do win ourselves and gain a bit of commercial to support all the other activities that we do, which is fab. There's no pressure on that, of course. But that is the part of the partnership for transparency. And that does allow us to sacrifice some of our percentage to make it even cheaper as well, right? So it gives us a little bit more control if we ever needed to. So the purpose of this session is to make an introduction into the two co-founders of Assured, Ed and Henry. They wanted to engage with you guys to talk about essentially the reason they've launched a bit of a disruptor when it comes to cyber insurance specifically. And as ever with the alliances, we like to myth bust and blow out some of the buzzwords that happen in the industry and come from the industry to give you guys a different perspective or a different version of the truth that sometimes needs to be leveraged for your strategies, okay? And a version of the truth that's typically not commercially led when it comes to the alliances, we're more strategy led. So I want to pass over to Ed and Henry to give their introductions some justice, and myself, James and Bernard will monitor the chat. Please utilize raising your hand. If you need to interrupt, please do interrupt to make your point at the point where it's relevant. I will ask for people to mute themselves if they're not adding anything constructive to the conversation, such as, and I'm going to call your name if I can find who's loud at the moment. No, I can't find you. But yeah, so utilize the raising of your hands, utilize the chat, and get what you need from this session. Okay, make the hour worthwhile, be selfish, and we're not going to go anywhere right after it. So please feel free to reach out afterwards to your regional director, and we'll make further introductions and point you in the direction that you may need to go. So over to Ed and Henry. I'll ask you to put your cameras on and make yourselves known. Thanks, guys.
Yeah, hi chaps, pleasure to, and ladies, happy to be introduced to everybody in this group. I'm Henry Green, I'm the CEO and founder alongside Ed of Assured. As kindly introduced, we're a cyber-specific insurance brokerage. We feel we've come into this market at a very, very interesting time, as you probably all saw with last week's incident. But the core proposition is that we feel that insurance, specifically cyber insurance, has been done very badly for a very long time, number one. And businesses are either deciding to buy or deciding not to buy for reasons that we believe have been influenced in the wrong manner. There's a lot of myths that we believe we can bust, and there is, in many instances, a very commercial use case for buying cyber insurance. And so we're happy to contribute to this group in any way we can do, even if it's just solely from a guidance perspective of the right questions to be asking when buying cyber insurance. So we've got one thing I would say is we've got pretty tough skin. We've faced a lot of battle, as you can well imagine, trying to step into this market as a disruptor. As much as you can understand about the business, about the questions and problems that we're solving, the better. So no question is too sharp, too pointy, too offensive. As much as you can unravel and as much as you can articulate, the better for us, because we'd love to be able to explain. So really happy to be here and speak to you all, and if we can help in any way we can. I lead this sort of commercial side of Assured, and hopefully can provide context in and around the I suppose I'm the generalist of the pot. Ed is the absolute specialist, so I'll pass over to you to make the introduction, Ed. But yeah, thanks guys, and look forward to an engaging session.
Brilliant, thank you, and nice to meet you all. I'm Ed. I head up the broking and technical team at Assured. So it's my job and my team's job to do battle with the insurers. We spend a lot of time trying to better understand the networks, the infrastructures, and the controls that lay on top of that, from people like yourselves, to then go and relay that to the insurer. It's obviously slightly tricky sometimes when you have to appreciate a large number of the insurers don't have the technical knowledge or capability as the likes of all of you, anyone in the security world. But what they need to understand is just where does the risk arise from. So a large part of our focus is, or a large part of our strength, I suppose, is being that bridge between the really technical, the really in-depth weeds of security, but being able to relay that, not so much in layman's terms, but just in a way that can be easily digested from the insurers. So that's where we try and hang our hat. Yeah, really excited for today. As Henry said, any questions on the process or what you think insurers are thinking, we're all open to it. So we can probably dive in, H.
Yeah, absolutely. Lee, how would you like to run this? We've obviously got some questions that you guys shared. Did you want to chair it? How would you like us to run it?
No, I'll leave you guys lead on it, right? Because you've got the context on it, so absolutely run with it, no problem at all. I think a good point, and I think something that's a lot of causality behind people attending, is the outage that happened last week or the week before, and the impact from that, and any learnings that you've got from the insurance space. I pinned you 3 questions out off the back of a group meeting we had. I think it'd be really good to address that first, because that's, I think, what most people want to learn about. I did share your responses, but if you can elaborate on that, that'd be fab.
Perfect. So let's start there. So I'll provide the client-facing soft side. Ed can provide the intelligence side. So certainly when it happened, we got track of this incident at about 6 o'clock in the morning. We stood up a briefing team at about 8, and every single one of our clients was notified about the incident at around 8:30 in the morning. We recognised that this was probably a larger incident than had occurred before, and I suppose there was 2 lines of communication. Firstly, we wanted to ensure that we understood properly what happened. So we had the technical team here did all of the diggings. As you guys will live, there's lots of Reddit chats that exist. We had a sort of semi-insider at CrowdStrike who was fairly familiar with what was going on, and we came up with what we felt was a good understanding. From a client perspective, we felt there was a lot of unknown. I recognise that probably clients had been hit by this incident before we were notified. Obviously, the blue screen was pretty obvious, but we sheltered a lot of calls for businesses, particularly CISOs, who just wanted to get a proper understanding of what had gone on. A lot of mistruths seemingly spreading online, and we stood up the briefing team at 8:30, and then were speaking to clients throughout the whole day, just on the line of, if you want to understand better what was going on, then call in. So that's how we set up the structure. As for coverage, Ed, could you give the team a better understanding of exactly how the coverage would respond and how it has subsequently responded, please?
Of course. So there's a few key implications that came out of that event. It's probably worth starting by saying insurers are obsessed with systemic risk, this idea that there's a risk that their books are unable to weather. We haven't really seen that happen, other than you could say maybe like WannaCry or NotPetya. They were big attacks, but ultimately the actual cost to the industry, the insurance industry, wasn't as big as you might think, considering the press, like the way the press took it and ran with it. So this was our first proper foray into what could be seen as a systemic event, and the question that we were asked frequently throughout the day was, would our coverage respond to this? Insurers have different responses, so we kind of spoke to as many as we could within the first couple of hours. There's a few things to consider. So number one, this was a non-malicious event. It's basically meaning system failure. So it was a mistake that was pushed through from CrowdStrike. So that's the loss trigger within most policies. So you'd have to first check if you had insurance, am I covered for non-malicious cyber? And that's where a lot of policies will only cover you for a malicious attack. So a breach, for example, unauthorized access. That was the first thing. We couldn't say yes or no unless we knew that was there. Number two, this was going to be triggered as a business interruption loss. So that was predominantly where insurers thought this is what we're going to be paying out on. Businesses unable to operate, that's what we're going to be picking up the cost for. So again, system failure, the trigger, business interruption is the insuring clause that would respond to it. The other things that you might need to consider with being part of your policy, dependent business interruption. So are you dependent on another piece of software like you're dependent on CrowdStrike? Is that there as part of your coverage? Data restoration, in case that was something that hasn't yet been realized, but it might be realized down the line. And instant response. So if you needed to pull on someone technical to come in and actually help you reboot your systems, that was a large cost. These are all things that insurers have notified and put onto their policies as potential things that they're going to be paying out on. To our knowledge, there's not yet been any cost that has been pushed out, but that doesn't mean that it won't be. It's been put on reserve. So long story short, would this have been covered? Insurers at the moment are saying this is what the policies are intended for. If you have that system failure and you have business interruption or dependent business interruption covered, we would expect this to be picked up under a policy.
Fantastic. And two other sides, Ed, just to touch on. So firstly is that because the losses haven't been purely calculated yet, we certainly, of our book, apart from maybe a handful of clients, it doesn't look like there's going to be large losses as a consequence, or large business interruption losses that are in excess of the excess, for want of a better phrase. But one thing that I think is worth noting is that some businesses with thousands of endpoints, and potentially when CrowdStrike's been deployed on servers where they don't even know where they are, the potential loss or long tail risk of this incident is still not known. And so we are unsure about what that loss could be, and therefore the impact it could have on future rates. So at the moment, it all seems a bit calm, but the loss adjusters and business interruption cost is going to take a while to feed through. So one thing to note is that we have no idea what the impact is going to be. There's going to be maybe some impact just because the loss was so widely publicized. Particularly depends, I think it's probably the airports who felt the biggest loss just on an easy surface level perspective. They certainly were the ones in the press the most, and transport, etc. We don't know, and that definitely caused an uptick in cyber insurance premiums across the board. Now, there's obviously ways to negate that we're going to come on to, but definitely something to consider. And secondly, Ed, could you give maybe just some context as, do you think that this has changed the perception of insurers about when an insurer traditionally has heard that CrowdStrike have been deployed on, or a business has widely deployed a software tool like CrowdStrike, that's been seen as a big green tick. Do you think that's changed the perception? Suddenly they're questioning how ingrained these software providers are in businesses, as opposed to just, do they have it?
It's a really, really important flag. And I think ultimately it will change. I think it would probably change everyone's perception of it, because you consider how much control or how much impact these security software providers can have. CrowdStrike still is a very good outfit, and insurers have in the past, or even up to now, have seen it as a bit of a, as you say, a bit of a tick. It's a bit of a, okay, you've got a CrowdStrike product in place, we're happy with that. That's going to help you get insurance. There will be definitely more scrutiny on the due diligence that you have as a business on onboarding new products. So new security software providers like CrowdStrike, they'll want to know what are the arrangements that you have in place with them, how embedded into their systems are you. It used to be if you had 97% of your network covered by CrowdStrike, it was an enormous benefit. And now obviously insurers need to think, well, actually that essentially means 97% of a business could be impacted by something similar to what happened Friday before last. And I think you could probably look at two levels that they're going to look at this going forwards. At the individual risk level, they will be looking to support businesses. So they'll say, look, we're here for you. The policies are here for you. If you bought a cyber insurance policy, use us as resource, use us to help you like compensate for the losses that you've lost. At the portfolio level, so where they've got mass clients, they're now going to be reviewing how many of their clients use one type of software. And that's where it's catch up for the insurers. They're worried that they don't have this right now. So going forwards, I think we can expect them to have a lot more, as I said before, a lot more scrutiny on what your due diligence is for outsourced third-party providers, whether it be security, whether it be software. That's where the onus is going to go, definitely.
And on top of that, Ed, can we go one step further? And this might be going into the weeds a tad, but in some policies, there's mass IT outage or systemic IT outages, which are exclusions from the policy. So in essence, a cyber policy wouldn't respond if there was a mass IT outage, something in the past that's been flagged as a key downside of a cyber insurance policy. At what stage, because at the moment, to my understanding, we're talking things like AWS and probably Google platform and a few other key providers who would fall into this category. Could you see IT vendors like CrowdStrike falling into this if the loss that comes out is significant?
I think there's not going to be one answer for this. It's going to be split. There are insurers out there who have infrastructure exclusions, which would include a critical service provider. CrowdStrike arguably hasn't been in the past, but you could argue it is a critical service provider. It's providing a very critical service for a lot of businesses. That is where insurers will say, I'm now going to exclude this because I think it's critical, and others will say, well, I'm still seeing it as a security software provider, so I'm going to support that. So it's just really it's going to come down to the individual insurer level in which you need to work out if that's within the policy, to have someone to basically kind of rip it apart and say, are you aware that CrowdStrike's a part of that, or is it not? The other thing is, I think there has been some talk in the past about widespread events. So anything that would be considered, this wasn't really a vulnerability, I suppose, but anything that would be considered like an 8.0 or above would be excluded. And again, it comes down to the individual insurer level, because some don't have those types of exclusions in there, some do. So it's not a straightforward answer, unfortunately, but it's just what you've got to watch out for.
And there's certainly a perception that it's a one-size-fits-all approach to a cyber policy, and these sorts of critical providers, or however it's phrased in the policy that Ed just talked about with the exclusions that exist. It's not the same in every single policy. Wordings are different. Exclusions can be removed if you know they're there, and I think that's probably the first place to start, is that there's no one-size-fits-all approach to this, and actually understanding which bits you don't agree with, which bits you're comfortable with, because many exclusions you're probably more than comfortable with in a cyber policy. It's been given a bad name because it feels like there's loads of exclusions in the cyber policy, of which there are. Not to my understanding and in my opinion, 90% of them are just fine, and you wouldn't expect them to be picked up in a cyber policy. But it's these sorts of technology ones that you as cyber pros will have an opinion on, that you need to alter, you need to tweak, you need to get comfortable with, and is one of the flags that we always want to go through. Are you comfortable with things like we've just mentioned? Because many businesses wouldn't even be aware that would exist. And if in the event of an incident like CrowdStrike in the future, if that were to cause a mass exclusion from a policy, which means that the policy doesn't even respond, whoever signed off on that policy is suddenly looking a bit silly, that wasn't flagged, it wasn't known. Why wasn't that picked up? And so it should be picked up, and it's something that should be exposed at the point of bind. So to come back to what we think is one of the biggest problems with this whole process, and then it links back into probably, I think it ties in with this concept that the insurers, this is a relatively new risk that's being insured, cyber in general. And I think the insurance industry is definitely playing catch up, certainly from a specialities perspective and an understanding of what cyber risk actually is. They certainly don't, I wouldn't say, and apologies if there are any insurers on here at the moment, we've never seen any evidence that they can all accurately judge what the fair risk is. Certainly from a pricing perspective, they can't put an accurate price on a risk model to say this is what the fair price of this risk is, because they're all pricing so differently. But they're playing catch up. There's lots of things changing. This CrowdStrike one being just one, I'd say somewhat of a black swan event. I don't think they would necessarily have considered a large IT provider going down. But one thing that's for certain is that this has led to, I think, an extension of what we feel is one of the biggest problems in this industry, which is the way in which information is collected. You will have all seen the rudimentary forms that are being asked to be completed. We've seen these on a spectrum. Some are very short, some are often 300 questions long, and in some instances, businesses are being asked to complete independent forms for individual insurers, which are asking rudimentary questions, probably often questions that are completely not relevant and not bespoke to the businesses that they're facing, and a huge waste of time and resource. We don't think that in this evolving market, at the speed at which it is evolving, that is ever going to be able to align with earning any sort of kudos from the security industry. We think that that is almost where this problem starts, is that if I joined this call and I said, okay, please can you explain to me whether you have MFA or not, and that was how I was going to base cyber policy off, you'd probably all think that I was a fairly junior cybersecurity individual. And therefore, what value possibly could a cyber policy have for me if that's the only thing you need to understand, when security is so much deeper than that? And so actually, we feel that everything has started from this very rudimentary way in which information is collected. And so actually, problem one is that it wastes a hell of a lot of time and that you're left filling in endless forms. And problem two, Ed, could you just give some examples as to what actually is the reality when these sorts of forms are completed and then sent off to insurers? What does it actually look like? The insurer receives the form, and then what actually happens, and how does risk actually then get quoted?
Before I do, Bernard, do you want to ask a question?
Oh no, I'm 100% supportive of what Henry is saying, because those forms have been driving me batty. I remember having to fill out millions and millions of those forms, and then they have a separate form for just ransomware and a separate form for just something else that has to do with continuity, and it becomes 6 or 7 different sets of forms that you need to fill out, and you don't even see the value in it, because, to be honest with you, the insurers that I was insured with at the time, and I can't mention their name back then, I'm absolutely certain none of them knew anything about cybersecurity or IT. And so I'm filling out this form, and I'm frightened that I'm going to be judged according to a piece of paper instead of someone actually looking at my infrastructure. So that's what I wanted to mention.
Okay, brilliant. Well, that's a really nice segue into my answer to Henry's question as well. Then, thank you for that. Like, what is the reality? What are you being judged on here? Sadly, the reality is just that you're being judged on a piece of paper which has been filled out black and white. Do you have MFA in place? What is the backup process? Maybe you have a little box to explain it, but it's not. What it's failing to do is ask, how are those different controls, or how are the different security products interacting with each other and interacting with your team? It's also failing to put any sort of personality to the business. And to flip it on its head, you have to feel a little bit sorry for the underwriters, because they're probably getting anything between 25 to 50 new business submissions every single day. So they are going through just forms and forms and forms. And that's why they always ask to meet clients, because they actually want to meet you. What I suppose is changing, what we're trying to change, is to sit down and actually meet the teams that run the businesses in terms of a technical standpoint, get a feel for who they are and how the teams interact with each other. And so without having a form, you go to the underwriters, and we basically are sitting down with them and saying, this is what the team's like, and these are the controls they have in place, and this is how they use them. It's a completely different story to just reading through sometimes 300, 350 questions, which is the same answers, black or white, that doesn't capture everything. You're not going to have EDR over 100% of your estate. You're not going to have MFA on absolutely every device. There's new devices coming into big organizations every single day. And we see claims happen where there has been an incident because something new added or something hasn't been patched to the time frame it was meant to. But generally, the business upholds this standard 98, 99% of the time. It's just that 1% that you get through. Lee, do you have a question?
Yes, I have two. What is the value tipping point for insurers? I.e., high cost of control as a minimum requirement and low scope of payment, DFIR notification, but not always loss payment.
Henry, what
That's
do you
question
think?
one.
So if I've understood this question correctly, the place I'd start is there's always a price. I think that this market has started in the concept that we can't get cover if our controls are not in a good enough place. That's a lie, and it's just that the IT estate has not been communicated to enough insurers. This insurance market is growing. There's a lot of innovative insurance providers out there now. We think the market's probably 40 or 50 strong, certainly in the UK, all with decent capacity. Certainly through the UK, we've heard of £450 million worth of cover being placed. So the capacity problem is now not a thing. And I do not, I mean, Ed, you correct me if I'm wrong here. We've never, ever not been able to place a client. So there's always a price. As to what the value is, now this is almost the leading conversation that I actually want to have with businesses when we first start talking to them, is that like that value question is a really interesting one, because there's going to be a price for your risk. So let's start at one end of the spectrum, which is price. What drives price? Well, there's three things you can't move in a cyber insurance policy which are driving the price, which is your revenue, the number of employees you have, and the amount of PII records you have. That is fundamental. You can't change that, and that is going to drive a significant amount of the premium. Fact. It won't ever change. The rest of that, and it's hard to say how big a percentage that is, but let's call it 40% is going to be on your security. There's 7 or 8 key areas that Ed will be able to touch on that will determine whether or not, if instead of seeing it as a this is probably the best way to describe it. If we can get a good understanding of those 8 areas, it then is how hard we can push an underwriter to go to their minimum rates. There's wiggle room. If there's wiggle room across every single discipline, if for want of a real simple explanation, if you had nothing in place, we're going to find it quite difficult to negotiate. If everything's in place, the chance of risk we sell is really, really low. Because also, if you didn't have any of those 8 disciplines in place, I think as an insured, you'd probably say there's probably quite a high chance that we have some form of incident, given how many attacks there are going on at the moment. So I think that's probably where I'd start, is that if you can have a good understanding across 8 or so key disciplines that they're interested in, the negotiation room becomes larger. So that's the first thing. Then how many insurers are being approached, because this is a negotiation game. We often hear of insureds being pretty happy with the price because they've had their price or their risk sent to 4 or 5 insurers. The reality is they've had their long questionnaire form emailed saying, please can we have cyber by the broker to 4 or 5 insurers, and that's what negotiation looks like. That's a long way away from what actual negotiation looks like, and making an insurer really excited about taking on a brand, taking on a name, getting excited about a security estate that they're about to inherit. That's a million miles away from that. And so actual negotiation probably involves, I mean, we start generally speaking with a pool of 20 to 30. That gets narrowed down as the wordings we're happy with, and as that gets narrowed down further. And then once they all know where they are from a pricing perspective, who wants it most, and that's ultimately how we squeeze best price in. So that's the price bit. Then from a value perspective, cyber insurance isn't for every business. We certainly have some businesses who say, we could take 50 million quid loss, no problem. 75 million pounds, no problem. And 100 million pounds, yeah, it starts to get a bit tight. Okay, well, 100 million pounds, you're going to be paying in excess, just call a spade a spade. You're going to be paying in excess of £1 million for that. Well, it's probably a risk we're happy to take, because we might not have very much PII, and our only risk is that we have a large outage that caused business interruption loss. So we're quite happy to take that £100 million hit, which at that moment is perfect. Like, we've got you to a stage that you understand exactly what the policy's done. You understand, right, in that scenario, that could be the potential loss, and actually we're happy not to pay the premium and take the risk. So that's the second part of value. What's it actually going to do for the business? And I think that probably leads on to the next question. We'll come to David's question, but I think that comes to the next thing is, what does a cyber policy actually do? Because at the moment, all people are seeing is 88 pages of wordings and thinking, right, what's the chance that this is actually going to respond in, I need a response in 30 seconds, not after 10 hours when I've managed to go through the whole insurance product policy. So that's probably where we'll come on to next. But David, sorry, I've spoken over your question.
No, thanks, Henry. That was very interesting. Just on the value side of things, is there some kind of methodology or something that we can actually look at, or is it really a risk conversation with the business? And what I'm saying is there some kind of framework we can have a look at to help us understand as purchasers of insurance, where we actually say, okay, well, actually, if I'm self-insured, for example, or if my business can afford this amount of loss, then I don't need to take insurance, because the value I'm going to get from that insurance payout is Y, and my pay-in is X. Is there some kind of calculation that we can do, or something that you guys have already, that we could use to help guide us in that specific value conversation?
Yeah, I mean, Ed, I'd love your opinion on this, but I'll start from one end. So how do we get there? How do we get to that piece? So firstly is, what does a cyber policy do? Like, what will it actually do for you? What will it deliver in the event of an incident? Because all insurance is doing is aiding you from a recovery perspective and covering the financial loss. It's always a loss product. You've suffered some form of loss, it's going to cover the loss. What does it do? And it covers 4 strings or 4 strands. So it covers first party costs, which is business interruption costs, generally speaking. So you've had an outage, it covers the gross profit line item, for want of there's a few other bits and bobs that feed into there, but in the main, it covers your gross profit loss. So when your team are thinking about calculating what's the potential impact, what are the potential ramifications, what are those incidents, this is, from an insurance perspective, this is how we'd start to encourage the insured to think about it. So there's potentially a business interruption loss. There's also a data restoration cost potentially, and then depending on how bad it was, if it was a not picturesque attack, there's also then a hardware cost. And then there's a third party cost element, and that's claims that could potentially be brought against the business following a cyber incident, and that's for the release of PII, generally speaking. And that can come from 2 sides of the coin. Firstly, from individuals saying that you've leaked my data and there's been some form of loss, or on the flip side, from government agencies levying some form of financial penalty on a business. Through, in the UK, we have GDPR, and you used to have GDPR, it's still GDPR, but that's sort of fine. So that's first and third party is the 2 major, more vanilla ways that a business can suffer loss following a cyber incident. And then the 2 more interesting bits are incident response. So that's the direct loss you're going to have straight away after an incident. So what does that look like? Who are you going to have to call in? The forensics, the legal teams, the PR agencies, etc., etc. And then finally, ransom. So what's the potential ransom amount? What's the ransom team that are going to have to come in to manage the scenario? And they can probably, in the worst circumstances, you could probably say we suffered loss across the whole band of coverages. In reality, it's generally speaking only a couple, generally IR, and it would be BI. It will be the BI cost, or it will be either third party loss, or maybe you got held to ransom and it was potentially, it interferes with the third party. But once you've understood loss, start off with what are the potential what's the potential loss scenarios that the business could suffer. And there's a million and different platforms that will give you, you'll put your details in, I'm this business in this industry, and it'll spit out a cost or a potential loss that you could see. I love your opinion on this. I just don't agree with it, because you're going to have all different software. You're going to have nuances in your response. You're going to have nuances in your approach. You're going to have different risk management frameworks. You are completely unique as a business. Therefore, how can a loss be exactly the same? You're going to have different decision-making powers, et cetera, different client relationships, et cetera. So the best way to come up with what that loss looks like is for your internal team to say, what are probably the 3 or 4 worst scenarios that could happen to the business? How would we suffer loss over a 7, 14, 28, 60-day process? Then we'll say, right, we're going to go to the insurer or the broker. We can help you do that process, obviously. You go to the insurer and say, right, that's how much coverage we think our loss looks like. now price it, and we can come up with a risk reward process as to whether or not that's worth it or not. Yeah, Ed, would you add anything to that?
No, I think that's the way to go about it. Every business is unique, even if you're in the same industry and similar sizes. You're going to have different controls and different different levels of impact if you did get hit. So yeah, it's probably not a direct answer that you're looking for there, but hopefully that gives you an idea of what you should be looking, internally first before saying how much do we need. You might be able to assess that. Yeah, I thought Lee, sorry, you had your hand up.
Yeah, I just want to check, David. Do you have anything to add there? Are you as content as you can be?
I guess so. I mean, the answer I kind of got is I need to go to my broker and ask him to help me to figure out the risk versus reward before we go to the insurer.
And one thing I would say, David, is once how far away from you are you from a price? You're maybe 3 to 5 days away from a price. How far that price could move is significant based on under a proper deep understanding of your estate. So we could have a half an hour conversation with you and we could get you a price as to what the ballpark you're looking at is. And we could probably give you a banding as to, once we really understand these areas, this is probably the lower end of the range. As to whether that's valuable to you, I think that has to be a personal business decision. It's a commercial decision. Is paying £500,000 for £1 million worth of coverage valuable? I don't think anyone could argue that would be the case. Is £500,000 for 100 million in cover? Well, maybe if you think that the chance of having an incident is less than 1 in 200, a full scale loss incident is less than 1 in 200, then maybe it is. And it just depends. It just really depends on, and this is where I think ultimately the conversation gets really tricky, because you as technology professionals do all the hard work to get it to a place where we can get a price. And then how are the finance teams or the legal teams who are signing off on this insurance actually deciding whether or not it's got value or not? And I think that's a very interesting breakdown in communication as to, has it got value? And yeah, that's the interesting area.
Something to add to that, just quickly on the end of this, is one of the most common pitfalls that we face in this industry is miscommunication of risk. So if you just step back from the control side and how well you can defend yourself against an attack, you would want to make sure that both your insurer and the broker fully understand what the business is doing, because again, all the insurers can rate you off is the forms that you've sent and your website and whatever they can find online. And given that they do have 25 to 50 submissions a day, they're not spending the time that they should unless it's like further down the line. So that initial review, the initial price, is always possible to squeeze on.
Thanks, mate. Thanks. It's more of a statement this rather than a question. Before I come to you, Deb, the comments you made prior to David's second part of the question, someone's put in there that it doesn't really work when it comes to public sector procurement legislation. Do you guys service the public sector when it comes to cyber insurance, or have experience of that? If not, then no worries. If you do, can we create or have a signpost to the information with regards to that specifically for those who represent that industry part of the forum? Is that possible?
So I'm sorry. The answer is no. Being honest, we've tried to work with some housing associations. It's at the moment it's too narrow in scope. We find it quite difficult to be able to use our way of understanding a risk to be able to get properly involved with these frameworks. So to date, no, we haven't. Not to say that we won't, but without wasting more time, I'm sorry, the answer is no.
Great. No, that's great. Thank you. Deb?
Yeah. How do you ever take into account the culture of the organization when you are looking at the pricing? Because I feel culture is something that, we look at a lot of tools, but actually it's really about the people. When you look at some of the biggest cyber attacks, it's all about someone clicking on something that maybe they shouldn't, and that culture within that organization. Does that have any effect on your pricing? Or would you take it into account when you are pricing up a policy?
It does. Training and the culture that you have around particularly onboarding new members of staff, is becoming increasingly more important. So there are definitely questions that are being asked, but again, the forms usually ask, do you have phishing training for your staff? There's different phishing products out there with different levels of ability, and so that's where the conversations go so much further, because if you can relay the fact that you're using multiple products, or actually you've got a really slick onboarding process with new joiners who are probably the most susceptible to having, you know, the CEO email come to them asking to do XYZ, that goes a really long way. I think it's, I mean, business email compromise is the biggest loss vector for insurers. It's the biggest trigger of claims. Something like 60% come from that. So, you know, if you can demonstrate you've got good practice around it and good people behind it, that's going to go a really long way.
Ed, could you just elaborate on that point? Because I think there's also a second bit to this, which is when a team is all joined up in their thinking in this, and how serious they take security, and how they've put processes in place to have an exco that are well versed in how they're going to respond. They've got a slick organization in terms of decision making post incident from not just the technical team but also the senior decision makers. Pitching that to an insurer does definitely shift the needle. And secondly, from your perspective, our reputation for a business having an incident is also on the line. I know it sounds strange, but when we broker risk to an insurer, when we really push for clients, because we believe that the chance of them having an incident is so low because of all of the things you mentioned from a hard perspective, but also, as you mentioned, Deborah, the softer stuff, the how well joined up the team and is what the ethos is. If we've really pushed a client to get them the best, to get the best policy, the best rates, and then they have an incident, insurers sort of look at us like, were you just trying to sell us there, guys? And it ultimately is our reputation on the line as well. And so that sort of element is 100%, because we align completely that you can have all the tools in the world. If the culture is wrong, it's as useful as a chocolate teapot. So it's 100% something that's taken into account. And Ed, you know, I've listened to some of your passion pitches to insurers, and I know for a fact you are selling the humans that are behind the tech too.
Yeah, completely.
Yeah. I mean, I should confess I do work for Liberty Specialty Markets, but I thought I would ask the question as well. But yeah, it's something that I think a lot of insurers have been missing. You know, I had worked previously in an organisation, and going in front of the brokers and the insurers. You know, my old boss used to call it the dog and pony show, and it did feel very much like a tick box. You know, when you're standing there and giving your pitch. And I never felt that they really got down to the heart of how that organization operates and feels about security. And I think that's just as important, as I say, as the technical side of it. So thank you.
Great. It's not always at fault. I mean, it's not at fault really of the insurers. You work from a place where you're given the information that is available. But I suppose if you can give a personality to a risk, it's suddenly so much more attractive. We are a people industry, probably more than most. And if you think for the last 350, 400 years, insurance has been done really predominantly, particularly in London, face to face. And so whilst the world has gone digital and a large part of that face to face has been lost, telling the story and particularly the story of the people and the culture is always going to get you a better result.
Great, thank you.
Thanks, Deb. Nice one, Ed. I've got a question off the back of that, maybe a point of reference for Cameron, who's taking notes in the background like a secretary. About your experiences of driving. You know, there's a lot of comments around pricing and value and all that sort of stuff, but driving the price down on premiums. In terms of best practices outside of the culture pieces, do you have frameworks of what insurers really like? You mentioned the eight areas that get reviewed. You guys may have a view on a solid, slick environment for most that potentially people can benchmark against as their framework as part of their strategy, right? There's a bit of a outside of this conversation, really, whether you have cyber insurance or not. But what is working, those that have not needed to claim, those that are having their premiums really low and things like that would be really beneficial. The question I have from the community, I won't expect an answer on that one, guys. We can chat about that again, yeah. So Rami's asked, how can we measure effectiveness and value driven of cyber insurance?
Okay.
So I think it sort of comes back to the question that I answered a minute ago. Is firstly, effectiveness is only going to be judged when it happens. So we've tried to change what the effectiveness or value looks like during the life of the contract. That's the first thing, because we feel to date it's been positioned as, here's a piece of insurance that it's a catastrophic risk line item. So these are not insurance policies that businesses are using all the time, like they are some of the other commercial lines for particularly large businesses. So it's a catastrophic risk line item. So they're not using it all the time, and so the chance they're actually going to see the value in it is fairly low. Testament to the fact that I think less than 3% of our book this year have had an incident. So the chance in general is fairly low. I know it's high in the grand scheme of things, but it's low. So what does value look like during the life of the contract? And we've tried to change that as well. And given the amount of information and the amount of spending that you're making on insurance, that we do believe that value should come from both the broker and the insurers. Insurers have moved forward a long way with presenting value, and a lot of them will provide a lot of additional training, security benefits and features that they will want to provide the insured. Some you'll obviously already have covered, some are really, really good. They also have really large teams as well, so I think they're very, very well resourced to play in those ponds. We've gone down the professional services route. So we as a broker deliver things like tabletop exercises, security maturity assessments. We do full onboarding with insurers and incident response. We can back incident response firms into panels that you may already use from a third party provider perspective. So we try to change what the value looks like during the life of the contract. So even if you don't have to claim, which we hope you never do have to, you're getting something for the money you're spending. It's not just a silent piece of paper. As to the value you get out of it in incident, all I can say is that the response is fantastic, certainly from an incident response perspective. Some of the insurers have got the largest incident response teams in the world. I know that the panels that are provided are first grade. We've only ever heard of really, really good feedback following an incident. The response is ace, and I think, Ed, you'll be able to attest to this. It's a really, really fantastic mechanism for responding to an incident. You know, we recognise that you still have to focus on protect and detect. This should be the respond bit in my eyes. You're going to have a joined up incident response plan, and there's going to have to be disaster recovery in place, understood. But insurance, when the pipes are connected properly and you know who's coming in and you know what their response times are and you know their SLAs, it's a really, really effective tool at managing an incident. As to whether it's valuable, that comes down to the question of how much are you buying and how much are you paying. And that's a commercial decision, not necessarily one that the insurance can answer. They're judging it on the perceived risk that the business poses. And if that perceived risk is less than how you perceive it, then businesses buy it. And if it's more than they perceive it to be, then they don't buy it. And that's generally how it goes.
You think about it, insurers don't really interact with the client until there's a claim. And really, the way a lot of insurers see it is when you buy an insurance policy, you're buying the claim service. So they will absolutely do everything in their power to help you, support you, because that's where they can demonstrate this is what we do. I think I think a relatively good stat to think about is every premium that's underwritten, at least 60% of that will be reserved for paying a claim. So it's you can think about that, at least where it's going on top of the operational costs, on top of everything else that they need. They're always thinking about that. As a large part of their thinking goes into supporting you for the incidents.
Fair, like it. We've got 4 minutes left. I imagine we're going to run over if we can, but if not, no worries. Kevin, can I come to you, please, sir? Hope you're well. Thanks for waiting patiently.
Yeah, no, Squire, I'm well. How are you buggers all doing out there? We've got a cold day here in Joburg, and we're discussing a cold subject. So same rules apply. Can I throw rocks?
Of course you can.
Right, so I've been through this, and I've had cyber insurance for many, many years. In fact, it was quite a new thing when we climbed on board, and the first cyber insurance questionnaire was almost a page long with almost 10 questions in it. And now I spend kind of 4 days answering the 400 questions in the new one. I do 4 audits a year, and one of them is the ISO 27001 information security audit, external as well, because we list it, etc. And I'm finding that over the last few years, these things are starting to align. The insurance company does have a bit of a slant towards their questionnaire, so it is, in my mind, still a bit left of center in that it's not following the rest of the stuff. And I hope to God they start to accept the ISO standards or the ISO audit as input into their process. But what I'm finding is that they're pressing towards certain technologies. They're saying, do you have this? Do you have the next thing? Have you done this thing? Have you done the next thing? And a lot of that is a cost or a technology cost, which is then assumed or kind of has to be onboarded. Now, we spend 1% of revenue on technology. We're the bottom of the tree, so we find this difficult. And in my experience, what happened was not great. So did we get value out of it? I suppose we did. We had an incident. We had to contact them. They sent the service provider in for the remediation. The service provider was more interested in finding out how it happened than remediating the circumstances. And the reason he was more interested in finding out how it happened is they're contracted by the insurance company. You're not in control of the process once you launch the claim. They are, because their policy kicks in. So there's a whole bunch of stuff I cannot do, and there's a whole bunch of stuff that gets in my way. So instead of releasing the server for me to go and bring it back up again, they had to dig through it and find out where the guys came in. And they went down a bunch of rabbit holes, sent up information which had no relevance to what the attack was, and said, due to these circumstances, we're going to not pay your claim. And so I had a stand-up fight with these guys for 3 weeks afterwards to go and prove to them that that was not the cause of the claim. And in fact, it couldn't have happened that way around, because we'd already done the workarounds on all of the items where they had CVEs that couldn't be addressed. But it was literally the same old, where you got to fight with the insurance company to get your claim paid. And the way they execute it's a bit weird. They've got a little gap in the middle. They pay for your first 48 hours. You then pay for the next 48 hours. And then based on what comes out of there, they may pay for the rest of the portion. And it's done that way around to suit themselves as well. Because in that time frame, they can then sit back and go and say, it doesn't work that way. And none of them understand the latest technology, because we work a lot with, at that point, we had a zero-tier network up and running. They did not understand how it works, and they can't evaluate it. They come back to you and don't understand your technology, and therefore rate your risk wrong. Now, in our particular case, we build data centers. It's why I have to have 27001. And it's a requirement of the contract to have cyber insurance. And in fact, they even stipulate the level to which I have to have it. And then the insurance people then stipulate what technologies I have to have, basically by asking questions that rate the risk high. And then they exclude nation state stuff, which it's always China and Russia. So they've got a backdoor to go and say, no, it was Chinese, we're not paying you anyway, kind of thing. And you have to argue with them. Where really what I wanted these guys to do is to spend a little bit of the money that they've got when they onboard us with their service provider to embed us and evaluate what the claim would look like if we executed it now. Now you take simple people like Dial Direct, etc., that are filling the potholes in the road so that their claim basis can come down, the profitability goes up, and the industry gets better. We don't have a circular reference here. We don't have a circular reference to the fact that you're taking on risk in the industry, but not doing anything about risk in the industry. And yet it's so simple because you've contracted the service providers, the kind of expertise that I can't get without taking out the contract. So to say that I am upset about this industry and it's a yes is the understatement of the year. I've been through the mill. I still have to buy it from these people. It's not polite or pleasant. And the questionnaires are getting more ludicrous every time I go through them. It's not a good circumstance. Listening to what you guys are saying, it sounds like you in the UK environment, you have a slightly more adult or respectful process going. You're slightly more insightful. You're looking at more sustainability and longevity in the industry than what we have here. Our insurer lost their data shortly before we were attacked. So we have a direct link between the fact that the hackers had a list of insured companies which would insure ransom payments and attack them. This is how ludicrous the process is. The people that were insuring us didn't even cover their own butts, didn't even go through the same process for themselves. So it really does need to make sense at the end of the day. It can't just be a contract at the end of the day you're trying to claim against. Otherwise, we're back to insurance. No one likes insurance. Why do you think we don't invite you to our Christmas parties? It's a grudge purchase, people. And that's it from me.
I have a couple of points I can come back on if you're open to it. And it does sound really unfortunate, Kevin, the situation that you had there. We do find here that there's much more of a disconnect in a good way between the incident response and the insurers. So the incident response team should be representing you without having the insurers meddle. So ultimately, with that first 48 to even 72 hours, you should be dealing purely with technical support. The insurer will come in afterwards. One thing to flag, because you mentioned about the costs being or the payment being withheld until you'd proven certain things have been managed. There's two types of policy. One is a duty to defend, and one is a right to indemnify. And right to indemnify means that the insurer has the right to pay back, but they're not the duty. So they will withhold pay. They could withhold payment whilst they do their own investigation. Duty to defend means contractually they are obligated to help you straight away. So it's worth working out which one of your policy is. And as we're taking on risk as an industry, but not actually doing anything about the risk, I definitely hold hands up on behalf of the industry in that there's definitely not enough communication going on between government, the security sector, and insurance. That said, there is definitely a threshold to get insurance, cyber insurance, for a lot of businesses. And I feel like whilst they might have gone down the wrong route of asking, or have gone down the wrong route of asking 300 to 400 questions of things which ultimately isn't giving you what you really need, they are at least trying to raise the bar to say, if you want to have security, you've got to have a certain threshold of controls in place. So they're encouraging good behavior. There's a lack of communication, but they are trying to do what they can to uphold standards for those that want it. And I think less than 30% of businesses in the UK currently buy it. I know that it's different in different places around the world, but it is still, it's the few, not the many.
Yeah, and so a few other bits. We've never been in an instant. I think that the idea that pieces of tech are being forced on you sounds like a small market that the broker's pushing you out to. We've never ever had a situation where a business has had to put something in place to be able to get cover. That sounds like the tail wagging the dog sort of scenario. Who knows your estate better than you? You should be deciding your technology roadmap. That's not for the insurers, in my opinion, to get involved in. You know your estate better than anyone else, and you're just asking them to rate the risk as it is at the moment. So there are plenty of insurers who will take what you're doing and the reasons why. I think the forms-led approach, again, is a problem. I come back to the process. You've gone through ISO 27001, says a million things about your estate that should just be verbatim taken. You need not fill out a lot of the questions, etc., to go down that route if you've already done that. Or of those 400, how many were relevant? Again, it just leads back to this idea: what's personalized? How well is that the recipient of that information actually understanding the business and being able to price it correctly? Agreed completely with the point about the insurance business being hacked and as such leaking the information. I've got no answer for that whatsoever. I think the point is well made and it's realistic. From a what is the industry doing? I think a lot, certainly some of the new up and coming MGAs are doing a lot. Well, are doing a significant amount actually. When you think of the coalitions, the CFCs, etc., they're doing a lot to do with threat hunting and bringing or having information on the inside, which is leading to some of the intel, which is bringing down some of the larger groups. So I think that they are starting to move into that world of filling potholes. The nation state point, again, so specific on the wording. We are yet to see a claim or hear of a claim in the UK that's been declined because it's come from China or Russia. It's just the way in which the war exclusion is deemed. It just doesn't work like that. Attribution, if it comes from Russia, it doesn't instantly mean it's excluded. And I think there's both sides of that coin, is that you could argue that if you have a wording that's in your favor, it sort of doesn't matter where the attack comes from, as long as it's not an act of war and there's clear articulation for what that looks like, it will be covered. We've still not seen one not paid. And ultimately, I think this comes back to the concept that it's been pushed as you you are a price taker, and I think this is probably the point. You are a price taker in this market. That is not the point. You're the price makers in this market. The policy, if you have a broker who understands this risk, you create what you want it to do. The broker goes and pitches your business and your full estate and the reasons why you don't have MFA on every device, but you're really comfortable with still not having MFA. They go and pitch your estate with the policy that you want, and you decide whether or not the price is fair. That's how it should actually run, because this policy that you've now taken should cover all of the weaknesses that you've seen in the past. It's just a shame that you had to go through it to find them. And that's where we'd always start off, as opposed to here's a standard policy with some standard exclusions.
Okay. Thanks, Henry. Eugene, thanks for the patience. Go for it.
Thanks, ladies and gents. Yeah, so I have a lot of the same questions as what Kevin did. So Kevin covered it awesomely. Thanks, Kevin. A lot of the same concerns, a lot of the same questions. My question specifically, and I've got a couple, but I'll try to get through it all. Do you recognize if we work with a security company already, a cybersecurity company, is that going to help our premiums because it's a recognized firm that we work with? And then additionally, if there is an incident and we engage with our contracted, let's say we have a retainer with a security firm, they're going to be looking into the incident. They're going to try and do the incident response. Would the insurer get in the way, like what Kevin's saying, or would they allow the actual company to do the incident response, try and mitigate and try and identify the threat, and then pass that information on? Or do we have to give way for the insurer to come and do it at potentially the downside of lost productivity because they are trying to ascertain what their claim is?
Ed?
I can take that. That's just having a little giggle that you can get a discount for CrowdStrike, because actually there are insurers who offer a discount for CrowdStrike as well before the incident. So pretty good time to buy. So just Eugene, to come back, I suppose, on the point about, do insurers recognize if you're already working with a cybersecurity company already? Again, it does depend on the insurers. In the UK, the majority of them do now. I'd say probably 70% of the insurers we work with, there's about 44 in the UK who underwrite cyber. They will recognize it. And to be honest, it would be encouraged from our perspective, because if you're working with a security operations center, it's outsourced, they know your infrastructure, they know your team, you've been working with them for a number of years. If you had an incident, it's going to be far slicker for you to use that team who know you already intimately, than going to the insurer and having what would otherwise potentially be a cold beginning. So we spend a lot of time getting the insurers' vendor panels, the incident responders, to know our clients. But if there's already a relationship in place, what we do is back it in. So what it actually looks like is we work out what's the hourly rate of said security provider, and then get the insurer to agree that that's what they're going to pay them if there's an incident. So it could save money if you had an incident and you're going to be paying that hourly rate anyway. The insurer can pick that cost up. Would they get in the way of this? Obviously, insurers, we'd be naive to think that they're not worried about costs racking up unnecessarily. Generally, they do support and will allow you to kind of run as much as possible. They just want to be in the know. And so if you're going to make a decision to basically go through tons and tons of data that's stored somewhere, which is ultimately going to have a massive cost, which would be picked up in the data restoration piece, they're going to want to know who's doing that and at what price and how long do you think it's going to take. It just comes down to communication.
Okay. Can I jump another question real quick?
Yeah, of course.
So I think Kevin mentioned this as well, is we put a lot of controls in place, but there's always something that's going to fail if you get breached or ransomed or something to that effect. So if that small incident happens, is the insurer likely to turn around and say, well, you were supposed to do this, but you didn't, and therefore we're not going to pay out the claim? or are you still likely to get that payout?
We've got a live example, and which I will keep anonymous, but of a client of ours who's had an incident where this has happened. So, relatively large business in the UK, they ticked and told us, but they also ticked a box within their application form saying their backups were secured by multi-factor authentication. They were subject to an attack about 3 months ago, Lockbit 3.0, came in and basically encrypted the entire backup, and the business was shut. There was a subsidiary of the business was shut down for a number of days, and they were unable to access any of the project work that they had. It actually went over, I think, over a week. The loss was actually rather large, and during the forensic investigation, it transpired that there was no multi-factor authentication on the backup. We obviously were terrified that the insurer would turn around and say, well, that gives us grounds to deny this claim. What's actually transpired, the insurer is so worried about their reputation being tarnished with not supporting a customer, is they've said they're going to support the client. They've made a couple of tweaks because they said, look, if you've admitted to this is a mistake, and it wasn't something that was just left off last minute. It was something that actually they had said yes, and it wasn't there. So they said, we're going to support you, but if the costs go over a certain amount, we want your retention is X, and we want to just increase it to here. So you're still getting the full support, but they just said, let's meet a little bit in the middle here. So what that tells us is this happens all the time. And that was a particularly bad one, because it almost came across as intentional. But the insurers are so worried about their reputation, and generally they do want to pay claims. One of our insurers has a 99% claim payout rate, so they do support businesses as much as they can. They're in the business of paying claims. Mistakes are accepted.
Yeah, I get that. So that's kind of good news. It just worries me, that the insurers will generally look for a reason not to pay as opposed to pay. But that's encouraging what you just said now. Another quick question is, like I mentioned, we might, or companies might already have a cyber security firm that they work with, and then you get the auditors too, right? So we get audited all the time through the big auditors like Deloitte and PwC, et cetera. And they try and pull you in a certain direction, and often they're not knowledgeable on the IT and especially the security side, and they just do a lot of tick boxes, and the security guys pull you in this direction, and now the insurance guys will try and pull you in potentially in a different direction. Is the insurance side of things going to deny insurance or try and pull you in a direction that you shouldn't really go, because what's on paper and a tick box is not necessarily the same in real life, what you're trying to actually protect? So I'm just trying to get a feel for that.
Yeah, I think it comes back to that point about you should never be led, I don't think, from an insurer's perspective about what technology to be using. I think you can be advised about what best practice is, but the reality is I've never seen the commercial rationale ever as to I'm going to deploy this piece of tech because the insurer says so, and it's going to reduce my premium by more than the cost of the tech. Like that just doesn't happen. And yes, it might reduce your insurance premium by a couple of percent, let's say 5%, 10%. If some businesses are paying, let's say that the most £1 million plus, we're talking about 50, £100,000 here, which is minute in compared to some of the costs of these big pieces of tech. So if it's one thing I disagree with is a piece of tech should never be deployed to be framed reduce the insurance premium. Doesn't exist. And I just don't think that could ever be a commercial rationale. Someone can shoot me down. I just don't see that ever being a use case. As such, there's good practice. And if you could be advised by someone completely independent as to actually, this is what we're seeing, this is where we're seeing incidents happening, we understand your risk, we understand what your business does, and therefore, have you considered doing X, Y, Z if you want to steer? That's probably the best way to go. Because it's so unique. Every single business is so unique from a security perspective. This idea that they should have all controls just to tick the box to say we have that control, I just don't buy. It's just untrue, and it's not making businesses more secure.
Yeah, I totally agree. Thank you. I've got one more question, if I may, Lee.
Of course, Nick. Okay.
This might apply to a lot of people, because I think a lot of people on the call are probably South African based, like myself. You guys at Assure are UK based. From a premiums and payout perspective, are we seeing any benefit by going with a UK based company where the premiums might be, with the exchange rate, a lot more? Yes, maybe the payout might be more, but I suspect the payout will be commensurate to the organization, not necessarily to the exchange rate. So there's a lot of South African-based insurance companies. So do we see value in going with a UK-based company?
I can't really comment. What I can comment on is that the two biggest drivers, in my opinion, on premium are the amount of insurers that are properly negotiated with, number one, and secondly, how that risk is being communicated by the broker to the insurers. How well do they understand your estate? They are the two most fundamental components we've seen, and I know that holds true across Europe. Use case as Lee introduced us, large European client was paying a large amount of money for their insurance, was being told that the market was small. We saved hundreds of thousands of pounds, and it was placed through London. And so that was on those two provisos. Let's understand the risk properly. Let's ensure that every single insurer who would like this risk sees it in its full glory, the full peacock mode. I can't comment based on exchange rates, etc. And what you guys are seeing. I've got no idea what an average South African insurance premium looks like. But if there is no additional alpha placed on it just because of the exchange rates, then I would assume that the same theory holds true.
So in short, Henry, explore it with you guys. Is that fair? And on a case by case?
I think there's a case for that, for sure.
Thanks, Jeff. So I will hand back after all my questions. I appreciate it.
Nice one, Eugene. Thanks for joining, mate. Been a while. Thanks for joining.
Yep.
That was handy, I think. So we still have 70 people on the call. So there's 70 reasons at least as to why people are staying on. I assume there's questions still to be asked or information expected to fall on your laps. You need to prompt us on that. Okay, I've put a reminder of our contact details into the chat. I mean, the guys are open to introductions, but to manage expectations, some regions can't be serviced, but there's definitely education and guidance that these guys are able to offer, and I think the easiest way of doing that is en masse with sessions like this. Otherwise, there's going to be a lot of repetition in terms of communication, as questions could be very similar. So we'll have a chat about possibly doing a second touch point off the back of this to follow on, or at least potentially consolidate or create more assets off the back of what's going on. We'll need your steer on that. There's no point myself, James, and Bernard, possibly Bernard, who's got a bit more experience than myself and James, to see what that conversation needs to look like. But feel free to make suggestions to us, and any introductions as we've stated there. Feel free to ask for those, and we'll put you in touch with Henry, Ed, or Cameron, who's also on the call, who's been a great point of contact for a lot of the community already that have reached out. Gents, just from my side, records broken in terms of alliances turnout, physical and digital chapters. So cyber insurance is riveting and sexy, if anyone asks. Everybody wants to talk about it, right? So and record breaking retention as well past the time. So really grateful for the extra time that you've given us, and shared your thoughts and welcomed the questions. Do you have any closing remarks from your side?
No, not really. Only that was brilliant, and thank you for the questions. It's a very misunderstood industry, and all that I can say is if it sounds like, rubbish, it probably is rubbish. And that's where we're trying to come up from this side. There's been a lot broken down in communication, we think, in this industry about you guys with a very, very unique set of circumstances from a security perspective, and how that information is transposed to the insurance industry, and then from that, how the communication is then relayed back to clients as to what the value a policy actually has. And that has become a sticking point, both for businesses who are buying for the first time and for businesses who are renewing and thinking, why are we paying so much for this? We're massive advocates of the cyber industry in general. We're massive advocates for the cyber insurance industry. We just want to ensure that the pipes are as open as possible, and that as much business flows to insurance as possible, because we do genuinely in our hearts believe that this is a product that is worth its weight in gold come an incident. And to date, businesses have not bought it. A lot of businesses have not bought it under false premise. And that's simply the battle that we're trying to go to bat for. So yeah, thank you very much for hearing us out. And as Lee said, fire any questions over to us as and when you please.
Thanks, Henry. Ed?
Final comment from me. It is it's a buyer's market right now, I think, and if you can, if it's a priority of yours to look at cyber insurance, it's probably a good time to actually review what cover you've got, go back to the market and have a look, because there's a lot of specialist insurers out there. With the right approach, you can get the best result.
Okay. Thank you very much, gents. Ladies and gents, those that joined, thanks very much. Those that stayed on, thank you. You know where we are. We don't disappear. The Alliances is 24/7. So keep